and people that want to purchase a home. So, hey, over on YouTube, God bless you guys. Who am I? I'm Garlinda Price. I'm the broker and owner of Fusion Properties LLC, right here in North Carolina, the best state in the entire country. And let's argue about it. Just kidding, right? But from the coast to the coast, you're a realtor for life. And so, my team and I wanted to come and share today. We actually have a team meeting tonight, and I was like, okay, well, before our team meeting, I want to share with you all what are some exciting things that have taken place in the market today, what's going on in the real estate market today. Let me just check and make sure I'm not frozen on the screen. But anyway, we work in multiple markets. For those of you that I've not had the chance to talk to before, I own a real estate firm, full service real estate brokerage. We do residential, commercial, land, subdivisions, you name it, we do it. And I know that I'm in the country, so my internet may act up a little bit. I may get grainy. It's okay. Stick with us. It's just country technology. So super excited to be here with you all tonight. But what happened in the market today? So as we all know, interest rates went down to a historical low as to where they've been. Now, I don't know how long they'll stay there or how long they'll be at that place, but I thought today would be a really great day to talk about how can you afford to purchase a home right now, right? If you're in the market or you were in the market pre-COVID, or if you were in the market during COVID and you kept getting beaten out, now might be a great time for you to hop back in the marketplace. Why am I saying that? And I just want to dispel the myth that a lot of people will say that we're out here talking about now is a great time to buy because we're going to get paid. We're going to get paid regardless. I'm a servant, right? So the Lord says that the servant is worthy of the hire. And what I mean by that is if we serve well, we get paid well. If we lead well, we get paid well. Why? Because the Lord will bless those that serve with good intention. And so we're out here sharing with you the truth based on good intentionality, right? From a place of ethics, integrity, and moral, and a high moral compass, okay? So we're not telling people to jump into the market and buy something they can't afford. If you know that right now it's totally unaffordable, disregard this message. But for those of you that are like, I've been waiting for my opportunity to hop back in, the real estate market has been like a game of double dutch, right? Rates will drop for an hour. Just kidding, right? Rates will drop for a day and they'll go back up. Prices jump up and then rates go up, and then it almost seems impossible for people, right? So again, thank you for being here with me tonight. I wanted to come with you and just share a quick market update of why now is a really great time for you to purchase a home. And not only that, the topic for today is, I want to make sure I read my own topic properly, right? How can you afford to purchase a home right now, right? That's the question. How can you afford to purchase a home right now? And so that's what we're going to talk about today. So again, we just talked about the interest rates dropped earlier today. And I think they went to like 7.85 and 7.8%. So I want to share with you what you can do to potentially purchase a home right now. I just need to share this to one more page and then we'll be ready to go into the content. Hold on one second. Discard. Okay, so good to go. So these are some things that you may want to consider if you're like, you know what, I'm in the market, I'm interested in purchasing. I want you to think about, it looks like I'm frozen. So let's see, hopefully it'll catch up, right? Can I purchase a property on my own, right? So that's one thing you want to think about. Can I purchase a property on my own, or do I need to have a co-borrower, right? So you don't necessarily have to be married in order to purchase a property together. So that is one way. I'm just making sure that my screen's not stuck. So hold on one second, okay? Okay, so that is one way that you could purchase a property together, and that you could go about buying a property is to buy with someone else, right? Whether you want to buy with a family member, whether or not you want to purchase with a fiance, whether or not you want to purchase with a girlfriend, whether or not you want to purchase with a boyfriend, whether or not you want to purchase with your child, right? So a way that you could be able to purchase a property right now and get into the game of home ownership and or investing is buy with other people. Group your money together, right? The word of God says that two can go further together, right? And that a two-strand cord is not easily broken. And so therefore, if you go with someone else, you can potentially buy more home. You can potentially get a larger home. You can potentially go further with someone else. Now, the other person does have to have good credit as well, just like you have to have good credit. But that is one way that you could purchase a property right now, is if you have someone else that you can go on the loan with. Let me just put my phone on do not disturb right quick. Okay, so think about that. Who can I buy a property with, and can we purchase a property together? Now, these are some programs that I heard about today that are on the market that I didn't know existed and were out there, and they are with one of our lenders, right? You know, in real estate, we have our favorite lender partners. So shout out to Movement Mortgage, your hometown team, Kathy Hutsell and Pam Pritchett. They are incredible. So we use them for our down payment assistance programs, VA loans, conventional loans. They are incredible, right? They also have a wonderful program for people that are 1099 borrowers. And then also another lender partner that we have. These are two programs that we found out about today that are available to people that live in certain counties, right? So let's say that you live in one of the counties, and I'm not going to name the list here, but reach out to us. I want you to call us 910-494-7798. I want you to call us, and I'll connect you with one of my incredible agents, or you can work with me. Depending on the market that you're in, we have brokers all across this local area: Raleigh, Durham, Chapel Hill, down in Rocky Mount, Goldsboro, Warsaw, Jacksonville, Wilmington, North Carolina, New Hanover, Brunswick County, Moore County, Lee, Harnett, Hoke. You name it, we can probably help you there. And so give us a call, 910-494-7798. But with that program, they actually have, let me get my notes, so that way I'm talking from my knowledge and not off the top of my head. We have a meeting tonight for our team, so I just want to come here and share with you all this information right quick. So if you happen to live in one of the markets that this loan could work with, let me tell you the details about it. Come in, give me 1 second. I got so many notes. Okay, so with this particular program is that it's 100% financing, so you don't need down payment assistance. There's no PMI, so there's no private mortgage insurance. It's a great interest rate right now. It's at 7.58%, and there are no origination points. You do have to have a 640 credit score. Right now, it's better than a conventional loan product. And it has to be where this particular lender has a physical presence in that county. And again, we have that list. Now, it also is not the same as down payment assistance through the state of North Carolina, which we do through another lender. And it also has nothing to do with any of North Carolina's other down payment assistance loans. So what is awesome about this program is it's 100% financing with no PMI. So PMI is private mortgage insurance, and a private mortgage insurance policy is a policy that you and I, all of us, pay if you don't put down 25% on a property, right? Well, 20%. If you don't put down 20% or more on a property, your loan has private mortgage insurance attached to it. Most people would think, oh, that's an insurance policy for them. No, that's an insurance policy for the mortgage company in the event of a person defaulting. You pay for it, I pay for it, but the mortgage company gets the benefit of it if somebody defaults, right? So they basically charge us for their default insurance. And so this particular loan type by one of the lenders that we work with, they have a first-time home buyers program that is 100% financing, no private mortgage insurance, a 7.58% interest rate, which is really great compared to the 8 and 9% that the market has hit. There's no origination points. You have to have a 640 credit score, and they have to have a physical presence in that county. And trust me, there are a lot of counties that many of you are in where they have a physical presence. You could benefit from this community bank program. Now, another program that he shared with me that they have, and this one I had not heard of before, I thought was really awesome. So this is for buyers that are purchasing a property in an area that has a 49% minority rate or higher. So in other words, based on the city or the county demographics. That particular area of the city or county, if it has 49% or greater minority presence, then this is the loan program through FHA that this particular lender can offer as well. So it's going to be based on the census tract. Okay. So you can call us for details, 910-494-7798. We'd love to be your realtor partner. We'd love to help you find your purchase your next home, your move up home, your vacation home, your land, whatever it is that you're looking to do. We'd love to partner with you on that. Now, the programs that I'm talking about are not just low to income, moderate income loans. These are loan types for anybody, right? You just have to fall within the guidelines and the parameters to use the loan type. What's awesome about this particular loan is you only need a 600 credit score. That's huge, right? Because most minimum loan credit scores are 620. So you only need a 600 for this particular loan type. The property that you're purchasing has to be on the census tract for that city or county in an area where it's 49% or greater minority presence in that area. What else? They're going to give you a 2% lender credit, which is not the same as a 2-for-1 buy down. I'll tell you the difference in a second. They're going to give you a 2% lender credit. So normally when you're using an FHA loan, you have to have 3.5% down, where they're going to give you 2% and it goes on your loan as a second mortgage. But what does that do? It enables you to qualify for more home, and or it enables you to have down payment assistance without the North Carolina down payment assistance program that requires you or mandates you to stay there for 12 years. So I thought this was a really great program. Now, the difference, why I'll tell you in a second why it's different from a 2-1 buy down. So minority area, majority on the census tract, 49% or above, FHA loan, 2% lender credit to buy down your loan permanently. So that's the word to remember when I tell you the difference between that and a 2-1 buy down. This lender is going to give you 2% off the current interest rate. So they're going to buy down your interest rate, which increases your affordability, right? Because it's the interest rate based on debt to income ratio that lowers the amount that a lot of people can use to purchase, right? So when you have a lower interest rate, you can purchase more home because the debt ceiling for that interest rate is lower. So that means your purchase price can be higher. So if you're someone before that was like, okay, well, I can only buy this amount of home because this is the interest rate, this opens up some space for you, some movement and some budget room for your purchase price. Okay. So 49% or greater in that area on the census tract of a minority area, predominantly minority area, 2% lender credit, not the same as the 2-1 buy down. It goes on your loan as a second mortgage. You can have a 600 credit score or higher and do this loan type. You don't have to pay it back. Now, well, you don't have to pay it back if you sell within a certain time. But of course, because it's a second, let me take that back. You don't have to pay the money back. But because it's a second mortgage, when you go to sell your home, there needs to be enough equity in there to pay off your first mortgage and your second mortgage. I'll give you an example. So let's say you purchase a home that's $350,000, and let's say that you have that 2% lender credit, whatever that is. Let's just use 300,000, and that's let's do the math, child. I'm terrible with math. God bless it. And I know I have some teachers on here with me. 300,000 times 2%, is that $6,000? Yeah. So you'd have a $6,000 second mortgage, right? So you'd pay your $300,000 first mortgage off, and then that $6,000, you'd have to pay that off as well when you go to sell the home. If you don't have it within the proceeds of the sale, you got to pay it out of pocket. Okay. But it's different from North Carolina down payment assistance, which I'll talk about in a second, because I'll tell you why. Okay, so what is a 2-1 buy down and what is a 2% lender credit? So the lender credit that this particular lender is offering is they're using this to say, we will buy down your interest rate. Okay. and we'll buy down your interest rate permanently. So let's say that you purchase a home today and the interest rate is 8%. And let's say that they say we're going to buy down your interest rate from 8% to 7.5% or 7.8%, however they work out the points, right? Because it doesn't go from 8 to 6, although it sounds like it should, right? But if it's 8% and they buy it down 2%, that's a permanent reduction. That means that whatever the interest rate is that they give you when your loan is originated, when you go under contract and you go to close on your home and you get the keys to your home, that is your interest rate for the next 30 years. If you do a 2-1 buy down with some of these companies, they're buying down your interest rate 2 points, whatever the point system is that they use. And sometimes it's only for the first 2 years of your mortgage. Okay, it's not permanent. So when you see a 2-1 buy down, depending on who's offering it and what the incentive is, it may not be a permanent reduction over the 30-year life of your loan, even though it's still great because it's going to save you the first 2 years of your mortgage. It's going to save you interest. It's going to allow you more flexibility. It's going to be an incentive that you need to move forward. So it's still a good thing, but it only buys down your interest rate with some of the incentives being offered for the first 2 years of your loan. Okay. So a 2-1 buy down, we've talked about that before, but that's where the lender will buy down your interest rate for the first 2 years. So year 1, you might pay 6%. Year 2, 7%. Year 3, it's at 8%. Hold on one second. Okay, so that's what a 2-1 buy down is. That's different from this loan type we just talked about. So if you're someone that's looking for a really great interest rate, or you're looking for a really great loan product, if you have a lower credit score, right? Sometimes things happen, lives sometimes, right? So if you're like, you know what, I've been trying to get to a 620, I've been trying to get to a 640, because in order to get the down payment assistance program through North Carolina, and in order to get one of the programs I talked about at the beginning, you need a 640 credit score. But for this particular loan that I'm talking about, you only need a 600, right? And you don't have to have money out of pocket. So why do I say that? Because with some lenders, if you have a 580 score or between a 580 and 600, you got to put down 10%. This loan doesn't require that. So that's why now is a really great time to buy, because I've not seen incentives on loan programs in years, right? During COVID, if you were trying to purchase a home, you already know the seller's like, take it, leave it, we don't care. We got 30 people standing outside in line, right? And so during COVID, it was very challenging. But now, we still have multiple offer situations on the market, but at the same time, there's fewer buyers. Now is a great time to buy because you have less competition. Now, it's not a huge amount of inventory, but there is inventory. You also will have to possibly adjust your taste and just say, okay, you know what, the home has paneling. I can always drywall over it. I can always paint it. It's not concrete, it's paneling, right? The bathroom may have that colored tile in it. Hey, Erica. Hey, Joy. Hey, JDN. It may have that blue tile, the green tile, the pink tile, the yellow tile. Y'all know what I'm talking about. My first home had yellow tile. We painted over it. It had what's that stuff? It had paneling. We painted over it, but we could have drywalled over it. And so right now, if you're looking to purchase a home, you have to adjust some of your wants. You have to adjust some of your needs. And then I will tell you that the one thing that I also noticed today when interest rates went down was that home prices went up. I was like, good gracious. I mean, they went up. And like, I don't want to say it was a significant jump, but it was a noticeable jump. So if you're I don't want to say in the market, you're either on the market or in the market. Someone that's in the market is actually looking, they're pre-approved, they're ready to go, they're making offers, they're in the market. Someone that's on the market and on the fence, it's just like, well, if I buy, I buy, if I don't, I don't. And they're not really committed to the process. So if you are in the market, you are noticing that these prices are high. And they're not going to go down. So I can, just to be the bearer of bad news and break everybody's heart, not yours, but somebody's, right? Home prices are not going to go down, right? Someone was sharing with me the other day that I'm working with, and they were like, well, these people want all this money for these homes, and they bought it for $100,000 and now they're selling it for $300,000. That's what real estate is about, right? And it's the same blessing and benefit that you're going to have when you go purchase. And even though you're buying right now at a higher amount. When you go to sell it, you're going to be blessed with the equity. You're going to be blessed with the ability to make money off of it. That is the blessing and the benefit of owning real estate, right? And so it's because over its history, it always increases in value. Even when we've had flat markets, even when we've had recessions, even when we've had economic downturns, real estate has always grown in percentages on a 2 to 5% on the low side, 50% during COVID. It is what it is, right? So if you're looking to purchase a home, I'm gonna go back to what I said in the beginning, just 5 things that may be a good reason or a good way for you to purchase right now. One, definitely get your credit fixed. If you need to get an extra job, I know you're gonna be like, Gerlinda, really? But if you need to get an extra job to pay down debt, do it. If you need to consolidate debt, do it now. And the reason I say that is not just so you can purchase a home, it's because the credit card companies, as interest rates go up and as the interest on your credit cards go up, it's going to be harder to get out of debt, right? I've been there. So when we consolidated our debt, it took 5 years to get it paid down. Do it. 5 years will go by fast. 3 years will go by fast. 2 years will go by fast. You can do it. Getting a second job. Why is that important? Because homes are much higher now. I don't want to keep saying they're expensive. They just have higher value now, right? And higher marketability. Whatever a buyer is willing to buy for it and whatever a seller is willing to sell for it, it's just higher, right? So if you get a second job or you have an additional stream of income that is traceable, not a 1099, right? Traceable. We'll talk about 1099 in a second, write myself a note. Then you can qualify for more home. And then I said in the beginning, consider buying a home with someone, right? Consider buying a home with your family, with a family member that also wants to own. What does that do? That gives both of you all a place to call home. It gives both of you ownership, and it gives both of you the opportunity to invest in something that will be a tax benefit for both of you, a tax write-off for each of you in terms of the expenses, but you may be able to qualify for more home. Right. When I wasn't married when Marvin and I bought our first home, right? We were together for 8 years, but we bought our first home when we were engaged. Right. And then after we got married, we already owned the home. So we weren't married at the time. And so you can purchase properties with people you're not married to. People do it all the time, but you better know that it's love, right? Because it could go any other way. But let's say, what else was I going to say? Okay, 5 ways. Buy a home with someone, get an additional job, get into a debt consolidation program, get into a credit repair program. Stop trying to, work your way around not paying to get your credit fixed. I remember paying $89 a month to fix mine and Marvin's credit, and it was worth every single dime. I have a friend on here on Facebook. Shout out to her. I'll give you her name if you decide, hey, I want to go through that program to get my credit fixed. It was worth every dime. There were no contracts. After we got our scores where we wanted, we were able to close the accounts and move on about our business. Okay. So there are ways around it. The other thing, what is something else that you can do? Move and look on the outskirts. Consider and expanding your search area, right? Consider moving to a different area if your job will allow you to do that, or if it won't take you too far outside of your footprint. If you have kids, I understand that's not always possible, right? Because you want to stay within a certain school zone. But if you don't have that tie down, consider outside areas and other areas that you can move to that are going to be less expensive. Because I can tell you right now, some of the country areas or the more rural areas, 1, have USDA lending. 2, they have more homes to choose from, larger homes to choose from, and oftentimes the pricing is better. Okay, so that's that. And then if you're a 1099 business owner, now is a great time for you to purchase a home. Why? Hey, you said, hey, Joy, now is a great time for you to purchase a home as a 1099, because before it was tough. Whenever I owned salons, it was always so hard to try to get a mortgage. I never could get one, because when you go to write off all your taxes and you have all those write-offs, it looks like you don't make any money, although you made a great amount of money, but you had to have the write-offs so that you didn't owe Uncle Sam, right? Well, now, post-COVID, all these lenders have come up with some incredible programs for those of you that are self-employed. They have bank statement loans. They have where they'll average out your deposits and average out your bank statements. And some of them look at credit, some of them don't, but they don't worry about your tax statement. They're going to look at your credit credit, yes, but they're not looking at your tax statement to say your Schedule C, your Schedule K, your Schedule E. They're not looking at all of that to qualify you. They're looking at the average of your deposits. So now is the time, if you are a self-employed business owner, to quit playing around, get off the fence, put your money in your bank account. If you don't have an account, open up your bank account and purchase your home now. Even though home prices are higher, your income should be higher as well. And you can use those higher averages and higher deposits to purchase your new home. Okay. So that's another thing I wanted to share with you. What else? Manufactured homes. You can get a loan on a manufactured home, but what I will tell you is that the interest rate is always going to be higher. Because why? The potential for a manufactured home to be destroyed during bad weather or inclement weather, hurricanes, tornadoes, wind gusts, floods, is greater than a home that's framed and stick built. It's not better, because actually manufactured homes are built better oftentimes than stick built homes, but it is going to cost you more to finance a manufactured home than it is if you bought a stick built home. So let me see if there's anything else, because I said 5 things. Area, buy with somebody, get your credit right, get another job. There was one more thing I wanted to share with you. I don't know, it escaped my mind. Oh, down payment. There's so many down payment assistance loans right now. There's some that don't have to be paid back. Some are grants. Some will help you buy down your purchase price. Some will help you increase and add to your purchase price. So now is the time to get your hind parts into the market. Stop waiting on the sidelines, because what's going to happen, and I'm telling you, every economist is saying this, every lender is saying this that I've talked to, not everybody in the world, but those that I've talked to, every broker, real estate is saying this: home prices are going to stay where they are and keep going higher. Even when interest rates come down, what is that going to do? Is going to create a FOMO effect, a fear of missing out. You're going to have that buying frenzy and craziness all over again that the market created, that was created in the market when there was no, when there was limited supply. So now is the time to hop in, because people, now it's getting ready to be the holidays. So during the holidays, a lot of people are like, well, I'll just wait. I don't want to be moving during Thanksgiving. I'll wait. I don't want to be moving during Christmas. I'll wait. Because I don't want to move in January, it's tax season, then it's Valentine's Day, then it's spring, right? So while people are on hiatus from looking, and they're on hiatus from deciding to purchase a home, now is the time for you to seize the day. Okay. So then this is the other thing, and I didn't read the whole article, so I'm only going to mention snippets of it, but there was this huge lawsuit brought by a group of people in Utah against the National Association of Realtors. And what they said was that they were forced to pay, the sellers that brought the lawsuit were saying they were forced to pay the commissions of the realtor that belonged to the buyer's agents. And they felt like there was some deception that took place. And because of that, now it could potentially set a precedent that sellers will no longer cover the cost of real estate broker commissions. That's huge. Why? Because if a buyer is already struggling with down payment, if the buyer is already hard pressed to say, where am I going to get the money to come from that I need to purchase this property? Now I potentially have to pay my broker and pay my agent. Where's the money going to come from? Well, one, I want you to know that this is not new information. When Marvin and I lived in the state of Virginia, shout out to the great Commonwealth, we paid our own agent commissions. We paid our own closing costs. So, and we didn't have the money, right? It was just by the grace of God that we were able to qualify for a HUD program at the time when we bought the house, right? So that's something that's going to be coming up, or could potentially come up in the near future. So if you're in the market right now, and there are sellers that are still in our state willing to pay real estate commissions or a portion of it, you don't want to wait, because the commissions can range anywhere from 1% to 6% to 7%. It's whatever is agreed upon. Okay. It's not set in stone. It's not a flat fee. Even though we hear 6% all the time, there's something called the Sherman Antitrust Act, which prevents commission fixing. So therefore, that's not a standard. That's just a number. Right? So it could be higher, it could be lower. It's whatever is agreed upon. But if you as the buyer are already like, well, I want to use a broker, I want to be able to purchase a home, I see value in having my own real estate broker. You want to buy now, while there's still some sellers that are like, okay, I'll cover that cost. And I will share with you that I sold a property 2 months ago. It was a for sale by owner. It was where my client wanted to be, and the seller refused to pay my commission, even after they had agreed to. So when the seller refused to pay the commission, I had to have the conversation with the buyer. Listen, in order for me to help you, the commission for my firm has to be paid. And if there was a cross-sell agent, I'd have to split that commission with that person. So we have to move forward with you paying the commission. And the buyer was like, okay, well, let's do that. Right. So there are some things potentially coming down the pipeline that are going to really historically affect your ability to purchase, that you don't want to wait and get popped upside the head with if it's already a challenge to say, okay, where's the money going to come from? Okay. Now, the other thing I'll share with you, something around commissions, is if the seller doesn't pay, the buyer has to pay for sale by owners, right? So a lot of people are out here as for sale by owners wanting to sell their property on their own, and they think that's going to save them the commissions. Statistics show, and this has shown this over the last 30 years, 20 or 30 years, the National Association of Realtors statistics show that the average for sale by owner gets 78% of their list price. And right now, we as realtors can get our sellers 96 to 94% to 96% of list price. What is the loss that a person is taking selling their own property? I'm gonna just do 94 minus 78, a 16 to 20% loss trying to sell it yourself. So when people say, well, we don't need realtors, or let's not use a realtor, if you're a seller trying to sell a property on your own, people think that they can negotiate with you. And not only do they want to negotiate with you, a lot of times, a lot of sellers don't have access to the real numbers, or they use Zillow, right? And I said that because I'm not dogging out Zillow, but they use Zillow, which is a third-party company located on the West Coast that pulls from public data, but not from realtor data. They pull from all kinds of sources to come up with their numbers. And so they're close, but they're not 100% accurate. Right. So then when you have a seller that's trying to go off of parameters that aren't 100% accurate, they lose money. Right. So you as a buyer, you do not want to represent yourself in a real estate transaction, especially, last thing, and I'll shut up here, is when you're out driving around and you're like, oh, new construction. I love new construction. I'm going to go look at a home in new construction. And then the sales agent, she's trained. That sales agent, he's trained. They're trained by the best of the best. These are regional and national sales reps trained by the best to know the trigger words, the trigger points, the trigger keys. The model home is set up, it's smelling good, it's looking right to draw you in. And what ends up happening is you think that they represent you and they represent the seller. They're a sub agent of the seller. They don't represent the buyer. They represent the corporation and the seller. So therefore, you have no negotiations. Right. And so if you don't have your own agent, then you could end up getting caught up in a situation where no one's advocating on your behalf for you as the buyer. You want your own agent. Okay. It's like going to court and representing yourself. You don't want to do that. Right. That's why they have lawyers. And so I just wanted to get on here and share with you all today that the interest rates had dropped down, which is a really cool thing. And while now is the time that you can put yourself in a position to own a home. And is it still good to own a home? Yes, it is. It's still good to have ownership. Why? Because statistically and historically, and this is a housing and urban development fact, that those who own homes live longer. They their kids have roots, right? They have access to tax benefits and tax write-offs. They create legacy for their families. It is a good thing to own a home. There's nothing wrong with renting, because like sometimes you have to rent. So I've rented in my past, right? Sometimes you have to rent. Sometimes you don't want the responsibility. So I'm only talking to people that say, you know what, I do want to own a home. This is important to me. But there is a good time to rent, right? It's when you don't want to be permanently attached to anything or anyone. When something breaks, you want somebody else to fix it. You don't want to cut grass, or you don't be responsible for different things. The maintenance, rent, right? But I'm talking to people that want to own. Okay, and then what about land? What about buying land? You specifically want an agent if you're going to buy or sell land. Why? Because you may think that, oh my gosh, you guys, there's an acre, 2 acres of land over there for sale. We could buy that and put a house on it. But how about you find out later on that it can't hold water and sewer? It can't get water and sewer to it. You can't put a septic tank on it, and all you can do is put soybeans on it. Unless you want to be a soybean farmer, that is not a good investment, right? So even when you get ready to think about buying land and you're thinking about homesteading, and you're thinking about all these different things of what you could do with raw land, you want a realtor, right? Because they're going to go out there and be able to walk that land with you and make sure you're not buying a swamp. They're going to be able to go out there and do the due diligence with you, or at least tell you where to go to do the due diligence to make sure you can even have access to sewer and water, right? Because you don't want to have a home with a 30-year mortgage with a porta potty, right? So that's why it's super important. You don't want to buy land for a home that used to have a gas station on it and then find out you have to do a $30,000 environmental test, right? Trust me, these things are out there that no one's telling anybody about. I'm going to end on this. I'm Garlinda Price, broker and owner of Fusion Properties LLC, from the capital to the coast, your realtor for life. The last thing I want to share with you is we've all have heard the term gentrification. So many areas are being gentrified. So many areas are being purchased. So many areas, and people are having, I may have to go open the door for Marvin. Kayla, will you unlock the back door for your daddy? So many areas are being gentrified, right? Because a lot of times we don't know what we own. The taxes aren't necessarily being paid. People devalue the land, and then they don't give us everything that we should get for the land or the home that's been in our family for years, right? And so we want you to call us. If you own land, or you own a home, or you have land that's in a rural area, or you have land that's been in your family for years, and now you're like, you know what, I think it's time for us to go ahead and sell it. We want to talk to you so that we can make sure you're getting top dollar for your family's home, for your family's land, so that you can be the one that benefits financially from the thing that was a legacy for you and your siblings. Okay. So that's the last thing I'll share with you. My number is 910-494-7798. And again, from the capital to the coast, what does that mean? The capital, Raleigh, North Carolina, and everywhere around it, all the way down in a 3-hour radius on the other side and 3 hours down south. We can help you in the state of North Carolina. If you're not in North Carolina and you have land and a home you need help with, we have referral partners across the country. So we'd love to connect you with a fellow professional to make sure that you're well taken care of. So God bless you guys. Thank you for being here with me tonight. And if you're ready to move forward with a purchase or a sale, we'd love to help you out. I hope you guys will share this video also with other people, because we want to be a voice and a resource for those that have land and homes so they can be in great hands. Okay. So I'll talk to you soon. I'm Garlinda Price. Bye. Bye, YouTube. God bless you. Thanks for being here with me. Hope you enjoyed the information.